As one of the most famous investment managers in the world, Cathie Wood is well known for betting big on a handful of stocks. Critics say she's playing with fire, but with a massive 152% return in 2020, Wood's ARK Innovation Fund has propelled her to the front pages of CNBC and many other financial media outlets. It's a high-flying, high-risk, high-reward tier of investing, and it has proved to be quite successful in the last dozen quarters. On the internet, she is viewed as the ultimate perma-bull, a foil to people like Peter Schiff, who believe we are just moments away from imploding the entire monetary system. Cathie, on the other hand, is famous for believing that the market is not in a bubble, and that we're only getting started with the genomic AI and fintech revolution. An investing theory that has proved to be temporarily correct as the market continues to march higher and higher. In 2021, with inflation looming, oil prices going crazy, and the Chinese economy shaking, many have looked at Cathie's comments as the light in the darkness. Across the industry, prominent investors are pushing a negative outlook on markets, but Cathie refuses to budge. Her latest video is filled with shocking predictions about our futures and where she sees the economy is headed. In today's video, we go over some of her plans and dig deeper into the events unfolding across the world. We start with inflation. As we have pointed out many times on this channel, record high CPI numbers have plagued the American economy for months now. The majority of citizens are beginning to doubt this problem is temporary. Even if you take the highly manipulated Federal Reserve numbers, the data is right in front of our eyes. For months now, there has been no relief from increases in prices everywhere. Cathie has previously stated that she believed inflation would be temporary and that deflation would be the problem of tomorrow, a theory that seemed delusional considering the actions of the Federal Reserve. In the first segment of this video, we analyze new revelations and look into the possibility that this problem isn't going away anytime soon. Take a listen.
The question about transitory or not, let's think a little bit more about that. The market is going up. If the market were going up, I would imagine that fears of inflation were diminishing, but they do not seem to be. The headlines and actually some of the statistics that we've seen coming out are quite surprising on the high side. They're certainly surprising me. So let's talk about why inflation might not be transitory. And I'll cut to the quick and tell you, we do believe that inflation is going to come down dramatically. So we have not changed our point of view, but let's be fair and balanced about this and make sure that we do understand what's going on out there. It was very surprising this week or last week to see the union workers at Deere reject their proposal, reject Deere's proposal for wage increases, which in year one, I think, if I read this correctly, year one, 23%, and thereafter 5% for the duration of this contract. And they rejected it. So that is really interesting. That we haven't seen that kind of wage increase, and I'm talking about the 5%, in a very long time.
So there you have Cathie a little bit surprised to see the inflation talk continue, something she believed would have disappeared by now. In my opinion, despite her stating that she still does believe it's transitory, there is a bit of worry, especially when you read things like the Deere strike. If you were not aware, John Deere is a heavy machinery manufacturer. The company is the world's largest manufacturer of farm equipment and employs about 27,500 people in the United States and Canada. Over a month ago, on October 14th, over 10,000 workers walked off the job in protest. They have asked for significantly higher wages to combat inflation. And this isn't the only incident in America. The same situation is unfolding for Kellogg's, Frito-Lay, and many more manufacturers across the country. Cathie is especially worried about these developments because they are a signal of an incoming wage price spiral, a macroeconomic theory that is used to explain the cause and effect relationship between rising wages and rising prices. The situation is simple. Higher wages lead to higher consumption, which leads to higher prices. That self-feeding loop can quickly get out of control. Once you give someone a raise, taking it back down becomes nearly impossible. But according to Mrs. Wood, this will all go away soon due to a massive rise in productivity. Productivity is a stat that has been accelerating for over a century, and it acts as a deflationary force. According to many experts, we will soon experience something called the Great Deflation. A period of time where we will see massive advances in technology such as driverless cars and trucks, advances that will bring down costs and fight inflationary forces. So far, however, it seems that these jumps in technology are still years away, and with rising input costs, inflation could very easily score an early knockout. The biggest of these input costs is oil. With a barrel now approaching the 2008 highs, almost every company on earth will see the cost of doing business increase. Oil, whether you like to admit it or not, is the foundation of the 21st century economy.
Another price out there that has surprised us is the oil price. I'm on record as saying a few things about oil, but that I have said that I would be surprised if oil prices surpassed their 2018 high. That was $77 per barrel. Today we're at $81 per barrel, and we have gotten as high, I think, as $84 per barrel. So I've been wrong on that, and in assessing why we're wrong, it's becoming very clear it's not the demand side of the equation. It is the supply side. We have ESG, so environmental, social, and governance objectives that pension funds are striving to achieve. And as a result, many pension funds, endowments, foundations are telling oil companies, look, we're not going to be buying your stock anymore because you're not shifting your capital spending from fossil fuels to renewables.
Now, what Cathie says here is incredibly important as it's one of the most underrated topics in finance right now. She states that she's surprised by the oil price and what's happening out there is a supply problem. Oil demand has not reached 2019 levels yet, so one would think that the price would remain low. Well, as it turns out, a certain element of society is politically shifting oil prices. Now, without getting too conspiratorial, you can watch my other video on this specific topic, but in summary, large institutional investors are refusing to give big oil money. This is resulting in oil companies failing to grow output. We now also have an administration that shuts down oil pipelines and at the same time begs OPEC to pump more, a confusing battle between saving the environment and saving the economy. With OPEC refusing to push more supply, we are left with higher and higher prices, thus feeding the inflationary loop. While no one truly understands what causes inflation, we do know it's likely a psychological issue. If the crowds perceive prices will rise, they will buy more now to avoid future pain, thus completing a self-fulfilling prophecy. Oil and food are right in your face and probably the largest influencers on this psychology. You can hear Cathie speak about this here.
OPEC is being very stingy with its supplies. I think this week it came out and it said in response to President Biden's request for increased OPEC supply, they basically said, this is your problem, not our problem. And I was surprised by that because we know that Saudi Arabia in particular, and I do believe that comment came out of Saudi Arabia, it was effectively get lost. I was surprised. Anyway, we know they don't want demand destruction because they have huge reserves still. So they want to have demand continue at a decent rate, and they don't want the substitution into renewables to take place. So I was surprised by that comment. There might be something else going on behind the scenes, probably political, that we don't understand.
So overall, Cathie seems to be slightly concerned about this growing inflation problem, something that she believed would have gone away by now. What this means for markets, no one knows, but as Michael Batnick has stated in his most recent blog post, you don't live in the world you were born into. Investors have suspended this belief. That's the only way to describe what's happening today. How else do you describe the behavior that allows a car company that has yet to deliver a car to be valued at $65 billion? With interest rates at zero, the entire playing field is distorted, and comparing this time to any other time in history is rather problematic. Before the video ends, I just wanted to remind you guys to hit that subscribe button if you enjoyed the content. We are at nearly 85,000 subscribers, and I would love to hit that elusive 100K mark before the end of the year. Thank you guys for watching.